Today's number is 449. That's how many people are moving to Calgary every single day. Calgary real estate has seen a great run, and a big factor has been affordability. When you look at the price gains that we've seen over the past 3 or 4 years, we've gotten significantly less affordable, but we're still affordable for a large metro in North America. But compared to a smaller market like Edmonton or Regina, we are higher, but we also have a lot more opportunities. Most of my buyers this year, and even some of my sellers, have been from out of province, majority Ontario, which makes perfect sense. Almost all of my Ontario buyers 2 to 3 years ago were investors and those who sold and now are looking to get more home or downside. Now, about 80% are first-time home buyers who are frustrated with the lack of affordability in Ontario and who appreciate what Alberta has to offer. Calgary's real estate prices are still showing signs of flattening out. And while some might see this as beginning of a downturn, I'm not one of them. Instead, I see it as a natural rebalancing after a period of rapid growth. We haven't seen the type of growth that cities like Vancouver or Toronto have seen, but we did see quick growth. But if we did continue to see quick price growth, unsustainable price growth, I would be a lot more worried. So why have prices in Calgary seemingly flattened out? It all boils down to a few factors. Despite an increase in listings, the supply remains tight. Sellers are reluctant to list due to high prices and limited buying options elsewhere. Even though rates have dropped and are expected to continue to drop, they're still relatively high, keeping a lot of buyers on the sidelines. While Calgary is more affordable than a lot of other large metros, economic uncertainties and cost of living adjustments are making buyers more cautious. Population growth has driven demand, but it's also reaching a point of saturation, slowing down the explosive price increases that we've seen in the past. In July, total sales were down almost 13% compared to July of 2023. We saw a slight increase in new listings by about 7%, and active listings actually increased over 17%. The average sale price is still up 12%, and days on market is up to 24 days, which is still significantly lower than long-term averages. If a home that's listed under $800,000 is not sold or under contract in the first 10 days, they're usually listed too high in price. It's still a seller's market, but there are a lot of buyers out there that are willing to wait for a well-priced home. We are still seeing homes sell in multiple offers, but you are also seeing homes start to sit on the market because sellers are just testing the limits of the price. Ultimately, the market will determine the value of each home, but when sellers have a lot of equity built into the home, they typically don't need to sell and they can sit on the market for a lot longer. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed, so please like, share, and comment below on the type of content that you'd like to see next. If we break down the real estate market by market segment and compare July of 2024 to July of 2023, this is what you would see. Detached home sales are down over 10%, and there are 13% more active listings, and the average sale prices are up about $70,000. This is a good thing for buyers because it's showing that the demand is there, but we aren't going to see that continuation of price surges. And if you aren't priced right, you will sit on the market. Semi-detached homes are still doing pretty well. Sales are down by about 1%, and there's 7% more active listings, and the average sale prices are up about $90,000. The most affordable homes are going to see the biggest percentage gains in price for obvious reasons. The apartment and townhome segments have both seen average sale prices come up over 10% compared to last July. Townhomes are still appreciating and they're selling pretty quick. They're averaging about 19 days on market, and that's with conditions. Apartments in Calgary have struggled since the oil crash in 2015. There's a perfect storm of negative population growth, mass layoffs, and multiple large apartment towers getting built at the same time. We have seen a great recovery, but we are starting to see one-bedroom condos start to stack up, and just like every other market segment, if it's not priced right, it's gonna sit. Other factors that we all need to keep an eye on. Interest rates are a hot topic right now. We just saw a small rate drop, and I think we're gonna continue to see nothing but continued rate drops given the state of the economy. If you're curious about rate expectations, make sure to check out my other videos on this topic. Affordability continues to be a key issue. The household income needed to cover the cost of home ownership in Calgary is much lower compared to cities like Vancouver or Toronto. Vancouver is an insane 106%, and Toronto is almost 85%. Calgary, on the other hand, continues to be more attainable for most Canadians, and that's going to be a driver for migration. We have seen unemployment numbers jump, but a big part of that has to do with those from other provinces coming here with no jobs.
Angela, I just want to thank you for several extremely pleasurable years working for this corporation. Certain unexpected developments have created a situation where I am no longer in need of employment. I would be remiss, however, if I did not extend my gratitude to you for your unwavering fairness and belief in me, and there is a giant poo on your desk.
So what can we expect for the rest of the year? More of the same. As rates come down, the apartment and townhome segments will continue to see price growth. With condos averaging mid 300s and townhomes in the mid 400s, this is the most affordable market segment for first-time homebuyers and investors. Detached homes under $750K will continue to be hot, but if you aren't priced right, they will sit. Consumer confidence has improved locally, but nationally it's low. Given the pain that's being felt in the Ontario, well, mostly Toronto real estate market, it has rippled into other markets as well. The economy as a whole isn't doing well, and with the election over a year away, consumer confidence nationally could remain lower for longer.